Good morning, everybody. It's 9:20 a.m. Pacific Standard Time, and what we are going to show you is the Dow Jones and what 2014 we're closing. We're in the 10th month of the year now, and when we started out, we had a nice pullback in the Dow. And the thing about it is that each one of these pullbacks were met with buyers. The high at this time was 15,000. The high of this bar right here, which is February, the high and the low, this was 15,340. When we started out the year on a weekly level, we were, of course, on the high at that time, 16,562. Okay? And then we dropped once again down to 15,340. So basically, what I'm going to say is that every one of these movements that happened were met with new buyers that came into the market. I'm going to just draw a trend tool. Oh, and not only that, you can clearly see where these resistance levels were on narrow weekly movements, but they made their all-time high. We had an all-time high right here on 713, and then we came down to this support level right here. These two weekly bars, this is where we got above the resistance level. That was that big down part of the move that we just currently had. But one of the things that I want people to understand, even with the current pullback that we've had in October, people need to understand what October is even about. October, you can go back to 1929. And you're going to find in those time periods, we either had 6% up moves and we had 6% down moves. So each party, the bull and the bear, got their share in October. They have come in, and I just want to show everybody, when I come down here, this date right here was during that August period. We put a bottom in, so this pullback, if you go from here to here, you got the 10-week and the 20-week. This low is higher than that last low. On Friday, they came in and they bought the Dow. So, I will just say that this last weekly movement that started out October did not start well for the bulls. And as a matter of fact, this low right here on the Dow, where that wick is right here, that was 16,674 as it is. So the 10-week moving average is exactly 16,933. That's the blue line. This red line is a significant 20-week moving average. And they came in, and that 20-week moving average is 16,911. How about that? 911. And on Friday, we got above it. But this is where we had the problems. This is where that volatility was. This is also later part of September and then going into October. And here's what I want you guys to know. 17,145 was the high of that weekly bar. Do the math. The low of that weekly bar was 16,674, and we closed on Friday at 17,000. That's a big psychological number. We are going to have a massive earnings season coming out in the fourth quarter. Technically right here, as it stands right now, that dip buyer stepped in on Friday. Friday options expiration was a big part of the Dow movement on Friday. However, the price volatility for the bull and bear are almost equal, but not quite. The bear still has a little bit of a footing. So I'm going to also show you this, which is very important. Okay, MMTs, we got the Dow Jones Industrial Average on a daily chart. And that blue line is a 10-day simple moving average. The red line there is a 20-day moving average. So basically on your daily moving averages on the 10 is 17,022. Now, on the 20-day simple moving average is 17,066. You can see where the 10-day crossed over the 20. The white line right here is a significant moving average, and it is a 50-day simple moving average. I want people to focus on one thing. We have not tested this green line is a significant moving average on the Dow, and that's the 200 daily simple moving average. I just want people to know that the last time that we tested this, we broke out, right? You know, this was back on 8/7. We broke out when we hit that 200-day, man, on the Dow. We broke out, and then we topped out right there. We topped out to this consolidation period. We came down, and then we went straight up, and we went straight up right here. Here it is. That was on 9/15, not too long ago. Bam! And we've gone straight down. So basically, I'm going to draw you another trend line, and I just want people to be aware that bull runs have got to have shakeouts in the market. And this particular bull run is getting kind of weak. It's been over 60 months. It's been about 6 years almost. And so this is that data. And this is where this 200-day simple moving average is going to be at 16,579. Another thing that I can tell you from a very exuberant phase is that we have a system that we run. This isn't it. This is just a public chart because outside of our MMT and our traders and whatnot, you retail people can relate to this kind of stuff that really doesn't work. But once again, it's a public view of what the public is doing. And we have slightly a sell signal on a daily. This is what a sell signal looks like. And when you get oversold, you rally. And so basically we're that 50-day simple moving average is 16,925. They barely close above it, really. But if we break that 50-day, the white line, and I'm going to pull this up so you can see it. I'm going to make you see it. And I'm only going to talk about that reversal on the Dow right here and that dip bar. What they would refer to as a reversal weekly doji. That is a retail talk. Price action is how we run our business. And we're basically coming up here through all of these key daily moving averages. You got the 50, and now this yellow line, that's a 100-day simple moving average at 16,882. So basically the counter rally on Friday is they bought that. There was a lot of short covering into that, and until we can get back up above this high right here, and I'm going to give the number out, we will say that until that week or daily reversal bar right here and these 2 days is that this Dow has to get up above it. It has to consolidate, and it has to remain above that on a closing level, and that's 17,200. And good luck to all of you. Our prop traders, you know what I'm talking about because we covered this yesterday. So this is what it looks like on the Dow.